Okay, and welcome back, students who are taking financial accounting, and we're doing the Chapter 1 problems, Group B, and we were working in the previous 3 videos on problem 1-37B, and we were almost done with the first requirement here. The only thing we hadn't done was calculated the new balance for each transaction, so and like I had said, I wasn't going to calculate the new balances every time I had a transaction, but now I do have to calculate the balances in all of the ledger accounts so that I can create my financial statements. Right? So as part of the process, this is sort of like, we're coming to the end of the accounting period. So this is June 30th where we've had all of our transactions and we have to create the balances in the accounts by doing the math. Right? So for our cash account, we have 14,360 plus our accounts receivable of 8,200. Okay, so cash, let me just quickly back up. Cash is the beginning balance of 1680 plus 10,000 less 3,100 plus 2,500 plus 2,130 plus 7,000 less 4,600 plus 250 less 1,500, and that gives us 14,360. So for our accounts receivable, it's 4,130 less 2,130 plus 6,200, which gives us 8,200. For supplies, we have 0 plus 850 less 250, that's 600. For our equipment, we started out with 32,000 and we didn't change that, so the balance is 32,000. Okay, so that equals our accounts payable. We had a beginning balance of 3,100, then we paid it off, and then we had an additional 850. So our accounts payable is 850. Our common stock started out at 30,000 plus 10,000 plus 7,000. So we're at 47,000 for that. Now, for our retained earnings, okay, remember our retained earnings is our service revenue, expenses, and dividends. So for service revenue, we had 9170 plus 2,500 plus 6,200, which gives us 17,870 minus our expenses. All right, so we had started out with 4,460 plus 4,600, which gives us 9,060, and we had $1,500 in dividends. Okay, so if you add up what's on the left of the equal sign, what our assets are, it should equal everything that's on the right hand side of the equal sign. Okay, so that will tell you if your debits equal your credits. So let me just quickly do the math real fast. 14,360 plus 8,200 plus 600 plus 32,000. That gives us a total assets of 55,160. Okay, so that's my total assets, right? My total liabilities is the 850 for the accounts payable. For my total equity, I have 47,000 plus 17,870 minus 9,060 minus 1,500, and so my equity is $54,310, right? And of course, total assets equals liabilities plus equity. So if I add the 54,310 plus 850, that should be 55,160. All right, so my assets equal my liabilities plus my equity. And it kind of behooves you to actually do this, even though it's not on your in your solution, because that's to double check your numbers when you're creating your financial statements, which is what we're going to move on to next. All right. So for number 1, we're complete, and now it says prepare the income statement for the month ended June 30th, 2014. Right. when we're creating our financial statements, we create our income statement first, right? And the reason why is because we need to know. I'm going to stay on this slide and write this in. All right. You know, in the beginning, just real quick, assets equals liabilities plus equity. And if all we use are just those categories of accounts, then our account equation should always stay in balance. But as soon as we use a revenue, expense, or a dividend account, right, that throws our account equation out of balance. Assets no longer equal liabilities plus equity. Okay. Therefore, you know, at the end of the accounting period, after we've posted all of our transactions from the journals to the ledger accounts, we need to close out our income statement accounts and the dividend account to our equity account. Well, we don't know what that total amount is, so until we've actually created our income statement, so that we can move that information to the equity account. So we always create the income statement account first, because if we don't, and we only use these, the assets, liability, and equity account, the equity is going to be off, okay, which means our accounting equation is, and you're not going to make your balance sheet balance. So you have to create the income statement first to find your profit or loss, so that you can close it up to your equity. Okay, that's the theory. So let's prepare the income statement for the month ended June 30th. Right? And again, for these financial statements, remember, lines on a paper don't matter as much. I mean, as you see, I have a blank screen. I'm going to be abbreviating and doing some things here. You should, I mean, I'm not going to capitalize, my spelling should be correct, but I am going to abbreviate and do some other things, only because of interest of time and the amount of space. When you're doing your problems, all right, I mean, you can do them like I'm doing, but realize that you would have to, when you're actually creating them to give to somebody else, all of your punctuations, capitalizations, spelling, the formatting, in columns, indentations, underlines, they should all be there. Okay. If not, that's an issue. And it's not just an issue for losing points on a test. In the real world, it's an issue, and you incur legal liability because your financial statements aren't formatted correctly. People will be making decisions based upon that information, and based upon generally accepted accounting principles, they go over, they use specific formats. So anybody and everybody who looks at a financial statement should be able to understand those financial statements, as prepared according to GAAP, right? So that you don't have one business, creating financial statements like an apple, and another business creating financial statements like an orange, right? You're not going to be able to compare apples with oranges. GAAP allows, using the GAAP standards and principles, we create financial statements for apples equaling apples, so that we understand what we're looking at. Okay, so heading, Interior by Jill Inc. Right, so this is going to be the income statement, and I'm abbreviating these. All right, you would write them out. Now the date, it's going to be for the month ended or ending June 30th, 2014. Okay, and of course this is all going to be center aligned, right? Right, but as you can see, let me go here, move over a little bit, right, for the month ending. And the reason why we have for the month ending is because it is for a period of time, right? It is not an as of date like on our balance sheet. Okay, so we have revenues and we have expenses. Okay, what revenue accounts are we using? Well, we have service revenue, and I'm just abbreviating, and we have salary expense. Okay, now, because we only have one account of each, okay, we only need to use one column. And if you look back for our salary expense, we had, I'm sorry, for our service revenue, we had 17,870, and for our salary expense, we had 9,060, right? So we're going to put that in one column. A dollar sign because it's the first number in that column, and commas are important, okay? And so there's our salary expense, and we're going to draw an underline under it because we're going to have a mathematical calculation in order to determine our net income in this case. Why? Because our revenues are greater than our expenses, so I know I'm going to have a net income, right? If it was the opposite, I would have a net loss, okay? And so that amount, when I subtract those two amounts, I have $8,810, and I draw a double underline under it because that represents the end of the mathematical calculation. Okay, so that's how we create the income statement. Now, if you watched from previous exercises, and I'm just going to allude to this, I'm not going to get into it. If I had, let me erase this just for a second to be able to point out a little bit more. Actually, do it like this. Okay, so let's say I had additional expenses. Say I had payroll expense and let's say advertising expense. Okay, I'm going to want to know what my total expenses were. Okay, and because of that, I need to do a mathematical calculation. And since I'm going to do a calculation, I would put the numbers in the leftmost column. So I'd have salary expense, payroll expense, advertising expense, and then I would have my 9,000 whatever here, okay, which would give me my profit or loss of 8810. And I'm just making these numbers up here, okay? But I'm not making these numbers up because my total expense is 9,060, okay? And so my net income would be the 8810, and I'd have a double underline. But what I'm pointing out here is that when you have more than one account, you're going to want to do a mathematical calculation. And when you do that mathematical calculation, you have to go one column to the left, and you put the total, right, the total expense, in the rightmost column. Now, if that number is still part of a mathematical calculation because we're taking revenues less expenses, we draw an underline and we do the math, and then we show the double underline because it's the end of the mathematical calculation. Okay, but in this case here, we only had the one account. Okay, so since we only have the one account, okay, I can just put all of the numbers in the rightmost column, right? Draw the underline and get my total. Double underline it because that's the end of the calculation, and write in my description. I see a lot of students who do not write in that description. They just forget it, okay? If you don't have a description, you don't know what that 8810 is for, okay? All right, so that's the income statement, and I will come back and do the statement of retained earnings next. Watch this video again if you don't understand something, and feel free to contact an instructor, but I'll see you in the next video.